Hi everyone, this is Ryan here from the Blockchain Markets, and today I'm here with Gregory Vandenberg from co-founder and CEO at Bankorus. Welcome, Gregory.
Pleasure to be here. Thank you so much for inviting me.
No, thank you. So for everybody for everyone that doesn't know you, can you give us a little bit of background of yourself, Gregory?
My name is Greg Vandenberg. I'm originally from Belgium. I studied philosophy at Oxford, and then I worked for Morgan Stanley in Hong Kong, and then I worked for a hedge fund called GLG, which at that time was one of the largest emerging market funds in the world. And then there, at one point, I met a person who was one of the largest owners of one of the largest conglomerates in China, and he said, "Look, what do you want to do with your life?" I said, "At some point, I want to do an MBA." He asked me, "Where do you want to do the MBA?" I said, "Well, I want to go to the United States." And he said, "Young man, if you do that, it's the biggest mistake of your life." I said, "Why?" He said, "Look, MBA is not what you learn; it's really the network of people that you make. And it's not really the network, now, but 10, 20, 30 years from now. And the US is great, but in 10, 20 years from now, it's going to be another country that will be, the main economy." And this was 2011, so people were talking a lot about the BRICS. And the guy was from China, so obviously, China was a place to be. And he said, "Look, I have a friend. He has a school in Beijing. I give you a scholarship. Why don't you go there?" So I got a scholarship. His friend was Li Ka-shing, at that time the wealthiest man in Asia. And then in 2012, I moved to China, and I'm still here. So that's the story. We set up during the MBA company that currently is the market leader in private wealth management software in China. And we have 200,000 family offices that use our software to handle their wealth. And we used, by coincidence, actually, to some extent, blockchain several years ago on the Hyperledger side to use an audit trail for different assets and different data about assets and ownership of the assets. And we moved from that aspect to, rather than building an internal chain where people put all the data internally and then share between different agents within different firms, we can actually reverse it and make the asset into data that then moves from one part of the ecosystem to another, and that's the birth of security tokens, and that's what we focus on with Bankorus.
Mm-hmm. Yeah, that's really interesting. So you saw the value of blockchain in that previous company as well.
I mean, this was before blockchain was a thing. It was just a type of a ledger technology that, because we worked on the AI side before, so we had AI engines that automate certain parts of the wealth management value chain. Mm-hmm. But the problem that we had was our team was spending a lot more time on creating and cleaning data from different databases rather than actually training the engines. And then blockchain is a kind of quite uniform way of organizing data in particular things. So yeah, that's what we focused on.
No, that's really interesting. Also, did you say that 200,000 private wealth companies in? Well, that's really
not companies. No, not companies. Families.
Family offices, or families in the network.
Yeah,
so high net individuals, high net worth.
Excuse me, sorry.
Yeah, I just lost you for a second.
Yeah, the line was not so good. Could you repeat it, please?
Yeah, so you said 200,000. Those are 200,000 individuals or families.
Families as clients. Yeah.
Yeah.
Not companies.
Yeah. Yeah. Anyway, it's a huge.
But normally, it's one account per family. So there's one main owner of the investment pool. Let's say.
Well, that's very, very interesting. And so now jumping more into Bankorus, can you tell us in a nutshell what Bankorus is?
Bankorus, it consists of a few components. The big vision that we have is that we believe a token is, as a form of owning property and owning value, the easiest way of owning it and transferring it between different people. And we see ourselves as Bankorus as the one-stop shop in this security token world where we're moving towards. And so we offer a variety of services that allows people to manage their wealth on the blockchain. And we're the open source platform for people doing that. So a big part of us is a marketplace where people can buy and sell different tokens, security tokens, for all around the world as accredited investors. And at the same time, we provide borrowing and lending facilities for them, both on the utility token side as well as on the security token side, and a variety of other things. But the main vision that we have is to be a one-stop shop for these high net worth individuals to enter the token space and other investors.
Well, that's really interesting, because so far, on the one hand, the discussion on about security tokens is in a very early stage, and it's so far what I've seen, it's companies doing that separately. So then I have like more like the issuing. Some others are looking at the more at the giving loans for tokenized assets, and some others more for exchanging. So in this case, you're planning to do a combination of everything and putting that as a one-stop shop in one single platform.
Correct. We think that previously, the internet in the 90s, people went to portal websites, and then if you had to buy a garment from Spain, for example, you go on a portal website, you click on buying e-commerce from Spain, and eventually you go on a website where there is a vendor who sells garments, from Barcelona or something like that. But then later on, Amazon, Alibaba, JD.com came along, and they sold, it's a one-stop shop where you aggregate different things into one platform, because people have a time cost to it. So for us, we believe that the different parts are not mutually exclusive, but actually can complement each other. So the place where you custody part of your tokens or manage your wealth would be also the place where you take a loan against them. It would be weird to move them to another platform, and then if you want to buy something and you want to sell it, you have to then move it to another. It's relatively cumbersome. I mean, at the end of the day, tokens are very precious, but the most precious commodity out there is time. And so I feel that there will be later on, after this sort of protocol age on the blockchain where we're now in, a lot of it will depend on the actual application layer. And in that way, people will gravitate towards platforms that will save them not just cost, but also a lot of time. And therefore, one-stop shops make sense.
Yeah, I think it makes sense also that because so far, as I said, the conversations have been very much about the protocols, but not that much on the ease of use. So that's not a lot of projects put the users before, and then they're thinking already on how are we making it easy for them to use our platform. In this case, by making it as a one-stop shop, it is much easier. They don't have to start learning different platforms and different places where to go. So then, no, very interesting. So but you basically planning to be the Polymath plus Nexo plus T0 in one, so to speak. So people.
No, I think it's a bit different. So I mean, Polymath is a protocol layer. So if you have an asset that you are looking to tokenize, and you need to have a particular chain to do it on. So Polymath provides a layer on top of Ethereum where, and this is only for venture capital and private equity funds, where you can tokenize that particular part of security tokens on the Poly protocol. And the Poly, that's not what we do. We're not competitors of Polymath. That token itself would then eventually could list on us, could list on Bankorus platforms. So we have I was at Polycon, the first security token conference in the world. Trevor well. There's a synergy between the two companies. And someone with T0, on the security token side, we have a very great relationship with T0. T0 is very US focused. They own a part of the Boston Stock Exchange. There are a lot of talks between the two of us and the corporation. They're very much US focused. We're based, here in this part of the world. So there is a complementary relationship. Also, on the US side, for each token, if you do a Reg D, Reg S offering, US investors can only invest in the Reg D side, whereas we focus on the non-US investors that focus on the Reg S side. So there will be some cooperation down the line with similar other providers in the US. I think the US on the security token side, for regulatory, and this is driven by what's coming out of the SEC, is much further ahead regulatorily. Most of the projects now are security tokens, whereas in Europe and in Asia, it's still very much, the number one question we get when we speak at conferences there is, what is a security token? So it's very much a different wave of the market. But I think the way you should see it is if you look at technological changes always happen in threes. And so when you have, if you look at social networking, for example, first you had the Friendster, and then you had MySpace, and a lot of people made a lot of money with MySpace. And then after MySpace, you have Facebook or WeChat in China, and so the value of the entire ecosystem of Facebook and Zynga and sort of all the entire ecosystem is an exponentially higher than the second wave. And the second wave itself was exponentially higher than the first wave. And so if you look at crypto, the actual wealth that was created, so the first wave was Bitcoin, second wave was Ethereum and all the ICOs on top of the sort of ERC20 standard. And a lot of people, as you know, made a lot of money from this and all the side conferences and podcasts and other things around it. But the third wave, we believe, is security tokens, and we believe it will be exponentially bigger in terms of people, in terms of wealth, in terms of value creation for society than the second wave and the first wave. Does that make sense?
Yeah, it does. I think that especially because that's what I've seen so far, that the conversation so far has been very much on that side of things, more like on the technical side and more on the different cryptocurrencies, different blockchains, but it hasn't been so far. And what are we gonna do, like to bring all this billions from the real world into a tokenized world, which is, I completely agree. It's the next big thing in crypto, I think.
Yes, exactly.
So speaking of which, for somebody that doesn't know more about security tokens, maybe you can walk them through, like, what do you think will happen on this new wave? Like, what do you think, like, if there are some particular assets that you think will be tokenized first, like real estate, for example, or among your own clients, among the assets they own? Do you think that would make more sense to start with a particular asset, or to tokenize a pool of different assets?
It's a very good question. I think the main benefit of securitization via security token rather than a stock or a bond or a title deed or a piece of paper is really the liquidity. And so it's primarily illiquid assets will benefit the most. Because in economics, there's this thing called the liquidity premium, which means that if I have two assets that are similar in terms of, let's say I have these two assets and they're exactly the same economically, but this is liquid, so I can sell it whenever I want to, and this one is not, then the value of the liquid asset is 20 to 30% more than the illiquid asset. Now imagine that I can actually take an illiquid asset and with a relatively simple procedure can all of a sudden make it liquid and have a market for it where people with, rather than selling this asset in its entirety for, let's say, $10 million, all of a sudden I can break it down and everybody with $100 can invest in it. And that increases the value very, very significantly. And so, especially in the real estate market, which is a $265 trillion market, many times bigger than stock market and most other markets, the impact initially will be quite big. And I think from a society point of view, it will also be one of the first markets where this tokenization will happen. And the reason why often is socially, because the biggest problem that we see of my generation is really the problem of the housing crisis, where if I look at my parents' generation, it's relatively easy for them, and my parents do not come from money, but it's relatively easy for them to get on the poverty ladder a few years after they graduated. My dad works for the railroads. He's a railroad worker, and still after a few years of saving, they can buy a sort of a modest house, and that is completely gone. I have friends who are doctors that have massive debt and still do not have a down payment ready. Here in we're here in Beijing, in beautiful Beijing. You see a lot of buildings, but most of the employees behind me, they know they have to work for 30, 40 years for a down payment on some of the apartments that they want to buy, and that is really sad and for our generation. And on the other hand, you have a lot of older people, the baby boomer generation and beyond, that have accumulated often second residence, third residence, etc., renting them out, collecting rent from our generation. And at the end of the day, that money will only become liquid, and they will only get that if they sell it in its entirety, which is often something they don't want to do for a variety of reasons. And if there was a mechanism where gradually people can buy, let's say, 1% of a house, and on the other hand, the older generation can sell 1% of the house, and then it becomes 2%, 3%, 4%, 5%, etc. over the course of a lifetime. It would make much more sense, because younger people, you graduate from school, you have your first paycheck, you can buy 1% of a house with an option to acquire the other 99% during your lifetime. So rather than waiting till you have 25 and 30% of the house as a down payment to pay for it, and you have all this fluctuation and increase in property value between the time that you start saving for that down payment and actually putting that down payment down. In the tokenized world, you can actually accumulate these tokens over time and actually accumulate ownership over time. And on the other hand, the older generation that needs liquidity, but not all at once, can gradually get more and more liquidity as they move towards getting older and need more and more liquidity. And that's a fair, more equitable system. And that's why I believe that real estate, from a social point of view, will be one of the asset classes with most impact.
Yeah, interesting. I haven't seen it that way, but now I see it's very. I haven't seen it as more as a win-win from one generation to another, like trespassing wealth from one generation to another.
It's not redistribution. It's not It's not redistribution. It is really, you create more value. You unleash value that's now stuck in an illiquid form.
Yeah. Yeah. Interesting.
Because if you would buy, if the house is now, let's say, if something is worth, a building is worth, let's say, $10 million, and I would tokenize it, automatically it should become worth $12 or $13 million. So you actually can unleash some of the value. So it's good for asset holders and it's good for asset buyers. Because someone, a goat herder in Morocco can have exposure and can have the same diversification of different asset classes as a George Soros right now. and access to similar products, because the barrier has been lowered considerably, and that's a much better world for everybody to live in.
Yeah, exactly. And then also the other part is that so far as a holder, you can just well, it's very liquid, as you said, and you can only sell locally. So I guess also with tokenization of this, you access more of a worldwide market.
Correct.
Which is also very, very, very interesting for all the owners of those assets as well, and the potential investors in those assets. It levels it equalizes the level worldwide. So one thing that we discussed about the tokens, maybe we can discuss on how is how would be the token of in Bankorus being would be utilized? What would the utility in the network?
It's a variety of ways on the utility side. So it will be used as a a main way of currency, like a voucher, as it were, within the ecosystem to pay, to get discounts, etc. And then it will be used as a membership token. So depending on how many tokens you hold, you have a different class of membership, which gives you access to different services, or access on a first come, first served basis of particular products on the platform and services. For example, let's say we have a Picasso that will be coming on the platform. If you are we have silver level, gold level, platinum level. If you're platinum level, for example, you can actually outright put in a bid, buy all the tokens, etc. If it doesn't get tokenized, it moves to the next level, and then it will get tokenized and fractionalized at the lower levels. So these are a variety of things that we are working with.
Yeah, interesting. For everyone that wants to learn more about that, and also on what we discussed before about the different modules in the platform of Bankorus, I encourage you guys to go and then read the white paper. That's very well explained.
Thank you.
Now, maybe we can now that we are going more towards the end of the interview, we can maybe discuss the short-term roadmap for the coming quarters of 2018, and then we can discuss the big picture, the long-term vision.
Absolutely. The center of what we do it is really this marketplace, this one-stop shop. So the B market part. That's where the focus is. We run a little bit ahead on some parts of the roadmap. We have a few MVPs that we will release to the public, and that has been the focus. The big view that we have for the long run primarily is to be this one-stop shop within the ecosystem, where people can buy and sell these different security tokens worldwide. That's the big view that we have, and we believe that a lot of the Asian jurisdictions will be some of the first to come on board and allow tokenization of some assets, some key assets. And we want to be one of the first people as well in that particular space. So the view that we have is much like the Alibaba or the Amazon of crypto, really a one-stop shop where you go for everything related to wealth management on the blockchain. In the same way people use, a Google for everything search related, or an Amazon everything e-commerce related, or an Alibaba or JD.com. That's the way how we see ourselves within the ecosystem.
Well, that's very interesting, and I also think that in terms of traction, having already 200,000 clients, then you're very well positioned to roll this out to a pool of existing clients that can use the platform, and then that differentiates Bankorus, in my view, from other players that might come and then have to start building that traction. That
That's what we believe as well. You know, we're not a new business that, you know, just came out with a white paper and a team that just came about. I've been working with my co-founder for several years, and he, by the way, was the head of wealth management at Creditys. You can look it up. Creditys is the second largest private wealth management company in China by volume. So he, before that, set up 50 physical offices across China and recruited, you know, over 1,000 relationship managers in less than 3 years' time. So I think most people in the team already have a track record of success of setting something up and then scaling it that has to do with wealth management and the clientele that we are servicing right now. So that's the idea for us. We really contemplated a lot about, you know, going onto the blockchain, focusing on security tokens, because we have a lot of, you know, previous reputation that we want to build upon.
Yeah, it makes sense. And I guess, of course, because of your current client base in Asia, you will start first there. And then what's the long-term plan? You would want to grow within Asia more, or are you looking also at other, like, West?
No, it's really global. So, you know, we have people in San Francisco, Europe here. So yeah, we're definitely global. Blockchain is, per definition, global from day one. So yeah. We have the same mindset. Of course, you know, a lot of the crypto whales are in this part of the world. But yeah, we're per definition global. A lot of the tokenization, strangely enough, is happening in America more so than any other places for now. Primarily because the SEC has been very vocal about this, and a lot of the demand actually is in this neck of the woods. So.
Perfect. One thing that I forgot to ask you when we were discussing about the technology and the blockchain behind. Are you running on top of a public blockchain at the moment? It's like,
we use a variety of chains for the reason that most of the security tokens use different chains to tokenize assets on or to work different things. And for different use cases, some chains are better than others. But
yeah, that's something that I've seen as well. That a lot of the conversation always, as I mentioned before, goes about one specific blockchain, and I've seen this more and more that companies decide that it makes sense that one blockchain platform is good and better in one thing. For example, for a good governance. Some others are good for other things. So maybe you end up, or in this case, what you said, it makes sense that you end up doing a combination, taking the best of each one.
Yeah, I mean, for us, the maxim we always had is to serve our customers the best and provide the best user experience for them. And some chains are good at solving certain user experience problems or certain problems that increase the user experience, and others are better at certain, other parts. And so we try to create something architecturally that makes sense, so it's not too much of an issue, and that the smart contract can easily move from one chain to another if that needs to happen via atomic swaps or something. But yeah, for us, the measure, the key KPI that we have is on the user side, and user satisfaction, ease of use, and that has always been with us. And we just use a technology that fits that's
exactly.
chosen by the user to some extent.
Yeah, it makes sense, and I think that's what I've seen also, that you all have now more of these technologies that are like above the different blockchain platforms, like One Ledger or Quant over Ledger, that are basically allow you to pick and choose from the best of every blockchain platform, and then just use a few of them. So yeah, I think we have discussed a lot already about Bankorus and the exciting new world of security tokens as well. I don't know if there's anything else that we didn't cover, Gregory, that you would like to talk about.
I think sort of one last thing I would say is that it's really a paradigm shift that we're in. The world is going to change to a larger extent than internet has changed. Internet, the internet is a way where well, let me tell you the following. Like, if you look at it historically, they did some research in what exactly made a big part of the Western Hemisphere relatively prosperous in terms of human flourishing and human progress that we've seen for the last 800 years. And so they went back and they found out that the invention of double bookkeeping that happened sometime in Florence during the Italian Renaissance, that allowed for double bookkeeping. You have debits and credits, and it kind of allows for global trade because you have books that balance each other out, even if you're in different parts of the world. And that is being used by a lot of the trading nations, sailing nations, and that is one of the preconditions. As boring as accounting may sound for many people that study it, but it was one of the main preconditions for actually global trade and global prosperity and the economic benefit that came about it, and that eventually led to the prosperous times that we are in. Blockchain, in a way, can be seen. A lot of people say, but it's just a database, just a ledger system. Yeah, that's right, but ledger systems can have a huge impact on the world, and so it's kind of like double bookkeeping 2.0 in a way. And I think the effects are beyond. I would not compare it even with the internet. I would really compare it with double bookkeeping and the effect that had from where we've been from Italian Renaissance, where everybody's still child mortality was still very big. Average life expectancy was half probably what it was now, and the effect that had on human flourishing. I think blockchain will be an exponential effect of that versus the internet.
That's very interesting to know and to start considering, also to look at how the next years would look like. Perfect. Well, I'd like to thank you, Gregory, for your time.
My pleasure. Thank you so much for inviting me, and all the best to everybody there.
No, thank you, and thank everyone in the blockchain markets community. As I said before, guys, if you want to know more about Bankorus, just go to their website. I'll leave a link below. Check the white paper, and if you have more questions, you can go to their social media channels and ask them directly. So thank you, and I hope that in a few months from now we can have a second conversation to see like how things started to move and how everything is going along. Yeah, that would be great.
Thank you so much.
Cheers.
All right. Bye-bye.
Bye-bye.